Item 3 of the agenda is to receive the financial statements for the period ended 31st December 2010, together with the report of the chairman and the group managing director, and the reports of the directors and auditors thereon. Ladies and gentlemen, the report of the chairman and group managing director is presented on page 6 and 7 of the financial statements circulated to members through email and as posted on the company's website. Unless anyone has any objection, I would recommend that we take the report of the chairman and the group managing director as read. Before we consider the director's report, I wish to present some of the highlights to all of you. The first maybe headline should be that the management presents a strong and successful financial result. Net sales without taxes, net sales is actually total sales minus the taxes, was up 5.2%, while cost of sales went up 3.7%. Gross profit went up 28% to 7.7 billion Kenyan shillings in 2010 from 6 billion in 2009. Gross profit as percentage of net sales went up to 7.6% from 6.2%. Average gross profit per unit strongly went up due to mainly retail, resale, African trading desk, LPG, export, lubricants, non-fuel. The board is reviewing the group revaluation policy, and I did cover it in my report, and I project that we will be discussing this issue at later stage today. Profit before tax went up from 1.9 billion to 2.7 billion. Now, if we exclude the 307 million Kenyan shillings capital gain on sale of assets, the profit before tax actually went up 65.8%. Profit after tax went up 37.2%. Group effective tax rate was in 2010 34.1%, down from 32.9%, and in 2009 we are excluding for this exercise the 307 million Kenyan shillings being, which is a capital gain on assets sold, being non-taxable income. Financing cost is up 531 million Kenyan shillings, out of which, and take note of, 438 million is realized and unrealized exchange loss in Kenya. From realized and unrealized exchange loss, out of which 135 million Kenyan shilling cost item or loss from hedging positions taken based on the board of directors' decision on hedging policy. On balance sheet, we want to highlight to you, shareholders' equity is up, and for the first time we are above 12.7 billion Kenyan shillings, and the group total assets is 32 billion Kenyan shillings. Management recognizes the persistent challenges of downstream business, in particular the difficult operating environment in Kenya due to government interference in the industry. We made that statement in the financial report, but what we said, in addition, that the board is happy to report to shareholders that its twofold strategy, i.e. geographical expansion outside Kenya, which, as you all know, started in late 1999, and focus on certain niche business lines, coupled with focus on development of certain new business lines over the recent years, such as African trading desk, such as non-fuel, LPG, and the fuel oil business, among others, has proved itself as a winning strategy. Hence, the influence of the very disturbing Kenyan oil industry operating environment has had minimal effect on the KK group. Another point was that management expects, and this is the view of the board as well, that high oil prices will still be there for some time. And here I may put a qualification and say that we know very well that there is a potential for a correction in this market. So we see the oil prices staying there for some time, high oil prices staying for some time with qualifications of corrections. And if correction does occur, we may see similar corrections like we have seen in June, July 2008. We do expect that this new, I would say, high oil prices and record oil prices. By the way, these oil prices as of today are, the highest since, if I'm not mistaken, July or August 2008. We expect it to drive inflation, and it will hit demand at one point. We are of the view that it's already affecting demand across the globe, and of course in Africa and in the countries we operate. And take note of something we highlighted in my report. Management of the group, physical inventories, and selling price is the most complex aspect of our business. The board decided to increase the group total storage capacity for fuels and gas. And I'm sure we are doing quite a lot in this area, and we'll be talking about it. The board has noticed the benefit of the group restructuring, which started 2 years ago, and the need for strengthening of certain high-yields business lines team. We are focusing very much on developing stronger teams in the high-yields business lines. Then I highlighted the progress we made in Burundi, in Zimbabwe, in Mozambique in my report, but I'm sure you'll be told more during the AGM. I reported in my report that we made some acquisitions in Uganda of assets, terminal in Jinja, 3 stations in the center of Kampala, and an office block of 3 floors. And I may say on behalf of the management that much more to be seen and much more to come. I'm sure you heard about the acquisition of a terminal in Dar, which we published yesterday. We commissioned the LPG plants in Kigali and Kampala, the LPG storage and the filling plants. Kigali and Kampala, they are already operational and doing very well. Finally, we said the board holds strong views of the economic future of all countries we operate in, and the board is quite bullish about the African growth story. The group will continue its twofold strategy to become the leading player in all markets in Africa. Okay, this is in short the highlights of my report. The report of the directors is presented on page 14 of the financial statements. Unless anyone has any objection, I would recommend that we take the report of the directors and the report by the chairman and the group managing director